Hey, welcome to the Guaranteed Retirement Guys show. My name's John Stevenson, and we're going to be talking about some crucial considerations for a joint and survivor annuity. So joint and survivor annuities, what are they? Well, they're usually used by married couples because they want to make sure that if they start taking guaranteed lifetime income, they want to make sure that it survives or goes to the survivor if the primary annuitant dies. So basically, it's a joint payout, but you can also set it up where it is a period certain for maybe 15, 20, 30 years. So it continues for a certain amount of time. It can be for life. And you can set it up, and this is typically when you do a SPIA or a DIA contract, you can set something up for life and also a period certain for maybe 30 years. And so it's good for your life and your spouse's life. So you've got that joint and survivor option. But at the same time, if you guys both die, let's say in the first 20 years, then your beneficiaries, maybe your kids, will continue to receive that income for the rest of that contract, the period certain anyways. So if it's a 30-year period certain, a life with a 30-year period certain, then of course, yes, you're looking at another 10 years of payments to your beneficiaries. And so the SPIAs and the DIAs options, remember, they're irrevocable contracts. You cannot change them. Once you put the money in, it's gone, okay? I mean, it's going to be paid out to you in the form of income, but you cannot change it, okay? You do not have the flexibility that you have with an income rider and a fixed index annuity. And those typically will pay you more lifetime income as well. So you have to consider that as well if you're looking for highest income. And of course, if you want to look at these with me, we can look at it together. Just book a call. There's a link below this video and we'll chat, okay? So, but things to think about, okay? So when you are purchasing an annuity and maybe you're single, but you're thinking about being married, okay, maybe you're dating someone and you're thinking, hey, we might get married and I want to have the option to have a joint survivor benefit. You can set that up, but really you can't do that with a SPIA or a DIA. You're going to have to do it with a fixed index annuity because those contracts, you'll still have the income rider, you'll still have a certain guaranteed growth period. And then, of course, at the end of that period, whenever you decide to take your income, your lifetime income, then at that point, you can decide if you're going to do a single payout or the joint survivor payout. Okay, so that's what's nice about those is they are very, very flexible. You can choose when you take income, and at that time, you can choose whether it is a single or the joint and survivor. Okay, so with SPIAs and DIAs, you pretty much are setting it and forgetting it. There is nothing else you can change about it. So for instance, if you're married and you're thinking, hey, I want to have lifetime income and I want to make sure it is guaranteed for my life and my spouse's life. Okay, I want this joint and survivor life option. You can absolutely set that up. And so what would happen is, I don't know, let's say the payments are $2,000 a month and you pass away. Since you have a joint and survivor option, then they will usually get the $2,000 a month for the rest of their life if you chose the 100% option. Okay, if you chose the 75% option, then it's going to be less. If it's 50%, they're only going to get $1,000. Okay, and a lot of times those are more popular, like for just employer-sponsored pensions, where they will give you the option to say, hey, here's the highest payout for a single payout, but if you die, it does not continue to your beneficiaries. Or you could take, maybe a 30 or 40% hit. Maybe it's not that bad, just depending on who the employer is. And then we'll give you 100% of that, reduced amount. And your spouse, if you pass away, will also get 100% of that amount. So it will not go down. So otherwise, you could choose a higher amount, and then they'll get 75 or 50% of that when you pass away. So you have to consider that carefully because financial needs change over time. And a lot of time people say, oh, well, I'm not going to need as much income when I retire. But I find that's often not the case because yes, your house might be paid off, but what if you travel? What if you have higher health expenses? What if you have to replace a hip? Okay, there are things that happen to us as we age, and we don't think about that. We're just comparing everything to how we feel right now. And of course, yes, there will be certain expenses we will not have, but then there will be new ones that we will have that we don't have now. Okay, so you have to think about that. So I usually recommend if you set up a joint survivor payout, do the highest payout as a joint so that it never reduces for your spouse. That is to me, the best option, because you have to have the most income later on when you're older, especially if you die and your spouse loses half of the Social Security because they're only getting the higher of the two. That's another option to consider. And a lot of times people will purchase annuity contracts just for that purpose, just to basically protect the loss of their Social Security income when one spouse passes away. Okay, they can just activate the income on that annuity contract that's been sitting there for several years. That's exactly what they use it for, to bridge the gap. Okay, but when you're considering the joint and survivor option, just remember that with a fixed index annuity, with the income rider, that's the most flexible. And if you want a period certain, then the only way to get that is through a SPIA or a DIA contract. And you could still choose the life option. It'll typically be less than a fixed index annuity option with the rider, but you can choose maybe a 30-year certain period so that if you and your spouse pass away, if you die, let's say you die in the first 15 years, your spouse is continuing to get the same income because they're the survivor of that contract and they'll continue to get the same income. But let's say they die and you have a 30-year period certain. Well, of course, that's going to continue to pay out to your beneficiaries. And if it's your kids, they will continue to get those same monthly payments until the end of that 30-year period certain. Okay, so that is the advantage of setting it up that way. So a lot of things to consider when you're considering a single versus joint and survivor. I would definitely recommend that you book a call. If you want to purchase an annuity, if you know that's something that you need in your wheelhouse, I would love to help you. Okay, there is a link below this video, and it goes directly to my calendar, and we can sit down. We'll talk about your unique situation, and I'm not going to try to sell you anything, but I will show you everything that's available, and then you can decide for yourself what's best for yourself. And of course, I'd love to help set that up for you if that makes sense. So again, I hope you enjoy these videos. If you do, please like and subscribe, and that way you'll be able to see all the rest of my videos that I bring out on a regular basis. And again, until next time, thank you so much for watching, and we'll see you soon.